Hey, good morning everybody. Today is Friday, May 6th, 2016. My name is Cliff Backus and this is your pushbuttonstocktrading.com daily video market review. Let's get started this morning with our spectrum analyzer. It's important that we identify where the leadership in the market is. To that end, we use HGSI, High Growth Stock Investors Spectrum Analyzer, to identify market leadership on a daily basis. Yesterday, of the top 100 most powerful stocks in the most powerful industry groups, 38 came from the real estate investment trust industry, 7 came from medical devices, 5 from midstream oil and gas, 4 from entertainment content, and rounding out the top 5, we had 4 defensive primes. We've been seeing a lot of midstream, well, we've actually been seeing a lot of oil and gas recently, not necessarily midstream. We've been seeing medical devices, and boy, we've been seeing a lot of real estate investment trust recently. 38 out of the top 100 is a huge number. Let's take a look at the Russell 2000. After trading higher yesterday, the Russell 2000 closed lower and closed right about the bottom of its daily trading range. Russell's looking pretty weak here. Notice how the Russell undercut our 1% envelope around our downward sloping 21-day exponential moving average. That's our definition of a don't buy signal. The fact that we're trading below the 200-day moving average gives us a sell signal on the Russell 2000. We don't generally follow the Russell 2000, but because I think the Russell's the key to the market, noting the sell signal in the Russell 2000 I think is appropriate at this point. Right now the Russell is bracketed by resistance up here in the 1140 area and support down here in the 1079 range. It's also worth noting yesterday that the Russell 2000 was down almost 0.5%, significantly more than the S&P 500 and the NASDAQ composite, indicating that the Russell seems to be weaker than the major averages, and I would expect that weakness to maybe spill over into the S&P and the NASDAQ composite. Speaking of the NASDAQ composite, let's take a quick look at that. But before we do, stocks lost some of their downside enthusiasm yesterday, with both the S&P 500 and the NASDAQ edging lower on lighter trading volume. Shares started the session higher, but mostly churned all day before giving back all of their gains to close at their lows yesterday. While the S&P and the NASDAQ lost a distribution day from their counts due to age yesterday, distribution remains a concern. A distribution day is a trading session where the S&P 500 or the NASDAQ closes at least 0.2% lower on heavier trading volume than the prior day. Distribution is a sign of institutional or professional selling in the market, and too many distribution days in a short period of time, typically a month, can indicate an uptrend is in trouble. Current distribution levels are a serious concern, with 9 days in the past month for the NASDAQ and 8 days for the S&P. According to investors.com, the current market outlook remains an uptrend under pressure. Meanwhile, our market timing model is barely clinging to a buy signal for the S&P 500, while the NASDAQ is on a sell signal. A buy signal on the S&P indicates that conservative traders can buy, but we shouldn't be increasing margin at this point. A sell signal on the NASDAQ indicates that aggressive traders should be off margin and can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss. All stops should be at their tightest levels on all positions. Conservative traders may want to hedge their portfolios with contra ETFs, exchange-traded funds. We're having a bit of difficulty with our data feed this morning, so we have no advanced decline or new highs, new lows data today. But according to our Ramosi ratio, large capitalization stocks easily bettered small, a fact borne out by the underperformance of the Russell 2000 and the small cap S&P 600 yesterday. Yesterday noted, small caps continue to outperform on a 10-day moving average basis. Bulls prefer to see the small caps outperform. The market appears to be struggling to define short-term direction. We continue seeing signs of strain in the market. The outsized distribution numbers and the sell signal on the NASDAQ are cause for concern for the bulls. This is a good time to reduce or eliminate any remaining margin in your portfolios. Be careful and keep your stops at their tightest levels. Okay, yesterday, after churning most of the day, the NASDAQ ended down 8.55 points, or just under 0.2%. We closed near the low of the day, and we closed at 47.17. Trading volume was just a little bit lighter than the prior day. And for you followers of William O'Neill, we are in an uptrend under pressure. We've been in an uptrend since February 18th. We have 9 distribution days in the past month, and particularly this distribution is a little bit of a cause for concern right in here. That's the reason that our uptrend is under pressure. The NASDAQ right now seems to be bracketed by support down here in the 4506 area and resistance up here in the 4900 range. We also have resistance at the 200-day moving average, which we show in black. Our market timing model on the NASDAQ is currently on a sell signal. A sell signal indicates that aggressive traders should be off of margin and can sell short. We should sell any long position that, if sold at current stop levels, would result in a loss, and all stops should be at their tightest levels on all positions. Let's take a look at the S&P 500. S&P was down less than half a point yesterday, or 0.02%, 0.02%. We closed at 2050, and note, we continue to hold above this 1% envelope, which brackets our downward sloping 21-day exponential moving average. Notice our 10-day simple moving average is also downward sloping, and so a move below this envelope would give us a don't buy signal on the market. We're barely clinging to a buy signal on the market on the S&P 500. We'll see what we do today. Yesterday, trading volume was a little bit below the prior day and a little bit below average. The S&P is indicating an uptrend under pressure. We have 8 distribution days in the past month. Right now, we are bracketed by support down here in the 2044 area and resistance up here in the 2116 range. Our market timing model on the S&P 500, as we noted earlier, is on a buy signal, and a buy signal indicates that conservative traders can buy. I wouldn't recommend buying at this point. What I would recommend is holding the positions that you currently have, as long as your current stop level doesn't result in a loss. And we certainly shouldn't be increasing margin at this point. Before we go, I want to talk a little bit about installed building products. Installed building products provides new residential insulation installation services, say that 3 times fast, with over 100 locations serving customers in 48 states. There's a lot going on with this chart, and the first thing that I want to do is I want to broaden this chart out a little bit. And I want to point out that recently installed building broke out of this double bottom base with a buy point in the 25.7 area, 2570 area. This is a first stage base. Installed building products gets an 80% checklist rating. We actually recommended purchasing IBP right here on the breakout above this double bottom, and we continue to hold it. Then IBP went on to put in this cup and handle base with a pivot point in the 28.18 area. Yesterday we reported earnings, and the earnings were considerably better than expected. The stock gapped above this cup and handle buy point, and now we appear to be working on a consolidation base right in this area. Noting that the NASDAQ composite right now is on a sell signal, IBP looks like a solid buy here, and I would say a buy for conservative investors. Notice how the trading volume yesterday was way higher than average daily. We've seen a lot of accumulation in installed building. Worth taking a look at by both aggressive and conservative traders here. That's about all I have for today. If you want to talk about any of the stocks mentioned today or any of our market strategies, please feel free to give me a call, drop me an email, or make an appointment. Come by the office, see what we're up to. Contact information is on the home page. Please take a minute to go to our subscription page and subscribe to Push Button Stock Trading. You can also follow us on Twitter at PushButtonStock. Again, my name is Cliff Backus. That's your daily video market review. Have a safe and profitable day. Keep your stops in place, and I will see you again tomorrow. Please stay tuned for our important disclaimers. All the best. Disclaimers. Push Button Stock Trading Video Market Review is produced and edited by Clifford B. Backus. Mr. Backus is a Senior Vice President of Investments, Technical Analyst, Portfolio Manager, and Partner with the investment firm of Ohanneson Liqueurs Incorporated. Video Market Review is produced solely for the benefit of our clients, friends, and colleagues. Anything written, stolen, and/or plagiarized in this publication is done without malice. Further, the analysis and opinions expressed in this publication are strictly those of the editor and not of Ohanneson Liqueurs Incorporated, its affiliates, subsidiaries, or any of the officers or employees of Ohanneson Liqueurs, Inc. On that note, we submit the following. The analysis, calculations, and evaluations presented herein are based on data and assumptions Ohanneson Liqueurs Incorporated believes to be accurate. Ohanneson Liqueurs Incorporated makes no representation that such analysis or calculations are accurate or that such valuations represent levels at which actual trades may occur. This report has been prepared from original sources, except where otherwise noted, and data we believe to be reliable. Ohanneson Liqueurs, Inc., its affiliates and subsidiaries, and/or their officers and employees or their families may from time to time acquire, hold, or sell a position in the securities mentioned herein. Moreover, opinions may differ from one entity to the next. If we are used in connection with the purchase or sale of any security discussed in this report, we may act as principal for our own account or as agent for both the buyer and the seller. Push Button Stock Trading is dedicated to the education of friends, clients, and paid subscribers. Push Button Stock Trading is an information service only. The information provided herein is not to be construed as an offer to buy or sell stocks of any kind. Push Button Stock Trading is created to aid subscribers in making informed investment decisions based wholly or in part on technical analysis. It's possible that at this time or some subsequent date, the editors of Push Button Stock Trading may own, buy, or sell the investments presented. All investors should consult a qualified professional before making any investment. The information provided has been obtained from sources deemed to be reliable, but it is not guaranteed as to the accuracy or completeness. The editors of Push Button Stock Trading make every effort to provide timely information to subscribers, but cannot guarantee specific delivery times due to factors beyond our control.